What's up, everybody? It's Sunday, December 10th, and we're going to be going over what's going on in the Bitcoin market with futures trading just hours away on the CME. They're opening for the first time on the CME just hours away. What is going on in the market? How's the market trading into it? And what are our expectations thereof? But first, hit that subscribe button, hit the notification bell so you get all of our videos directly to you. And you get our trading signals amongst a bunch of other videos on all sorts of other topics regarding crypto. So let's get right into it here. Right now we're looking at Bitcoin. This is a 60-minute chart. In other words, each candle represents 60 minutes, and this is for the Bitfinex exchange. What we're seeing here is we're seeing a descending triangle pattern, which is a bullish pattern on Bitcoin. And Bitcoin loves triangles. They're all over the place. Even over here, we could have drawn another triangle, descending triangle right here. There was another triangle right here. And that's just what happens with Bitcoin. And if you know anything about descending triangles, like I said, they're bullish. And here, if you're familiar with our videos, we have another application where we have our trading signals in, our indicators in, and part of that indicator package that we've created, there's a blue line that's on the graph, and we're going to get to that in a second. And that blue line represents a support level. It also represents a place to possibly get into trading on the long side of things, and also it also indicates if there's a change in direction regarding the trend. And so that blue line was at a level that's right about here, about 12,500. And that's why we indicate that this with a horizontal line here on this graph. So we had thought this descending triangle was actually going to come a little bit, it was actually going to extend a little bit longer. In other words, the price was going to extend within this descending triangle a little bit longer until it got to this level, this 12,500 level. Now, this tells us something. This paints a picture to us. The price did not necessarily come to the termination of this descending triangle. And where did it break? It broke to the bullish side. So that tells us a lot of information. It tells us that people want to buy, that there are a lot of buyers in the market. That the sentiment is that everybody thinks that this news is very bullish news. And we're going to get to that later on, why we think that this news is not necessarily bullish. Now, we're technicians. We look at the technicals. All of the data, the chart is all-knowing. The data is all-knowing. It has all the information in it. It is up to you to pull that information out. We're not fundamentalists. We don't trade on fundamentals. Never have, never will. Some people can do it. I can't. So that's what we're trying to discern from the information that the data is trying to tell us, is that there's a lot of bullish sentiment here, and so the price never got to here. Now, when we trade this, we don't wait for the price to actually get to this blue line. We actually trade it a little bit higher than there, because nothing is perfect. In this world, nothing's perfect at all. Even Fibonacci numbers, while they're rather accurate, they're not perfect either. So we got into this trade right about here, right at the bottom of these candles right here, where they're intersected with this line, because we had thought that there was bullish sentiment in the actual market. So that's how we utilize from the fundamentals on the technical side. Now, that's the most we ever use fundamentals in our charts. We're technicians, like I had said. So we utilized what our technical indicators were showing us, and we bought at a riskier position that we normally would have bought. Now, did it work out for us? Yeah, so far it's working out for us. Okay, the market's at 15,344. We got in right around here at 12,850 actually. Now that 12,850, was lying right on the bottom of this descending triangle. So we felt good about it. Now, had the market had come down to here, we would have picked up more. So we only got a portion of our position on, and that's how we go about trading. So let's look at our other application and let's pull in a bigger picture of exactly what's going on. Hey guys, okay, we're back. So remember that horizontal line? That horizontal line is right here. It's this blue line right here. Okay, so remember the descending triangle, the price never actually came down and hit that horizontal line. And it's the exact same thing we're showing right here. So this last candle is a daily. Remember, this is a daily chart, so these candles represent one day. So this last candle has yet to completely complete just yet. But what is the chart showing us? Even though we had a bit of a sell-off here from a peak, our trend strength indicator is still showing very bullish. Our D-trend kind of made a top and kind of turned the corner. We're not really so worried about that because it hasn't actually broken this trend just yet. And it possibly may, if the market continues to kind of just go sideways, or even if it goes down a bit, this D-trend indicator may show that it's actually starting a new trend, and that new trend is down. Our MACD is still in a bullish territory, and the RSI is going from an overbought position and it's going down. So we don't really use RSI much, but again, it's here for people that use it. We don't really use it at all. So really, everything looks really bullish. But do we think things are going to stay bullish for the future? No, we don't. Not yet. And that's because the big boys are coming in. And the big boys are coming in a few hours. They've been waiting for this. And we're going to explain exactly what we mean by that in just a second here. Okay, so what we were showing you before is the analysis of Bitcoin, of the charts, on two different time frames, and that's what we do. We like to look at a shorter time frame, like a 1 hour chart, in order to discern some of the market sentiment that will play through in the daily chart. And it's a common thing that we do all the time, and we're going to show you more and more about that in the future. But what was I talking about when I said the big boys are coming? The big boys, meaning the institutions, are coming. And they're coming, and they're coming with a vengeance. They're going to change the game. That is the way these guys work. They don't play the game. They change the game in order for it to work for them, for their interests. Now, why are they going to do that? They're going to do that because this has become an asset class that their investors, their clients, have become more and more interested in. It's Bitcoin's hitting all the headlines as it makes more and more market tops, and their customers are asking for it. What type of exposure do we have to the cryptocurrency, or aka Bitcoin market? And they need to get involved because they don't want to be caught with their pants down. If this thing were to run any further, they're going to be more and more embarrassed. So what we had seen, what Jamie Dimon was doing with that dog and pony show, was that exactly that. He was trying to manipulate the markets in order for his, and we saw it. It's exactly what they did. They were buying behind the scenes. He was trying to manipulate the market, so in order for them to get into a price that was more acceptable. In other words, it was more of a riskless price. It was more risk averse. They don't want to buy in the tops. These guys don't buy at the top. Okay. And that's what I think is exactly what is going on here. They are looking to go ahead and they're looking to change the market. Why do I say that? Because this contract is not made for you and me. This futures contract is not made for you and me. The average investor is thinking that this is a great bullish story. And actually in the long term it is, but in the near term I don't think it is. This contract is not made for the average investor. Why? Because the contract represents 5 Bitcoin. When was the last time you saw an average investor purchase 5 Bitcoin? At least at this lofty price. So 5 Bitcoin is one contract. You buy one future contract, or you sell one future contract. That's like buying 5 Bitcoin or selling 5 Bitcoin. The minimum price fluctuation is $25. So the price of the contract can either go up $25 or down $25 or stay the same. It can't go up $5 or up $7 or down $3 or down $12. No, it can either go in increments of $25, either up or down. So it's not made for you and me. It's not made for us at all. It's made for the large institutions. And everybody's been talking about, well, you know, futures are great instruments for hedging. Yes, that's totally correct. But what are they also great for? They're great for speculation. They're amazing tools to speculate on any market. Why? Because they have huge amounts of leverage. They're a levered product. I've had well over a decade of time on Wall Street, and I traded all sorts of products exactly like this, including options as well. And that's exactly what these things are used for, hedging and speculating. And I think these large institutions are going to be utilizing these contracts for speculation right off the bat, not hedging. Why? Because I don't think they have a large book of Bitcoin at all. I think they have a very small book of Bitcoin. I think they're holding a very small amount of Bitcoin. And they're going to change the game, like I said before. They're going to change the game because they see the bullish sentiment in the market right now. This is a perfect setup for them. And what they're going to do is they look at the bullish sentiment. So, for example, that downward facing triangle, right? We saw there was an early exit with that, and the early exit was to the bullish side. And they see the same thing too. And this is just a few hours away. So they see that the average investor is going to go ahead and buy this. They're going to buy this story. And what they're going to do is they're going to wait for the market to get to super frothy levels. And then they're going to sell the hell out of it. And how are they going to do that? They're going to do that through the futures contract. They're going to sell the futures because it's an excellent speculation tool. It's geared, it's levered, it has leverage to it. So they only need to put down a percentage of the actual notional value of the contract in order to sell the contract. So they're going to sell the contract, which is going to push down the price of Bitcoin. This is all in our own opinion. They're going to sell it after it runs up. And it's probably going to run up starting tonight. And they're going to start selling it. And they're going to sell it till it gets down to a point where they want to start buying. They're going to start buying the actual Bitcoin, not the futures. They're going to start buying the Bitcoin. They may buy some futures too, but they're going to start buying the Bitcoin. Why are they going to do that? Because these guys don't buy at the top. They don't. They change the game to influence the price to a point where they want to purchase it. They're going to purchase it at depressed levels, and they're going to come in with their huge checkbooks. They're going to come in with all their checkbooks that are backed by all of their investors, all their clients that say that they're clamoring over exposure to this industry. Because a normal client of theirs that makes, let's say, for example, $1 million a year and up, wants exposure to this. But those guys don't have the time or the energy or the know-how to go ahead and purchase Bitcoin directly on an exchange, nor do they want to go ahead and try to figure it out. They're too involved doing and running their everyday businesses. So they want to have their financial advisors and their investors and their financial advisors to go ahead and do it for them. So they're gonna so all these large institutions are backed by their investors, their clients, and they have a huge checkbook, and they're going to start buying Bitcoin. And that is going to be the next bull run of Bitcoin that's going to take it to levels that are going to be enormous. Now the question becomes, will you have enough stomach to hold throughout all of that? Or will you be foolish enough during this downtrend to start selling all your Bitcoin? And then these institutions will start buying your Bitcoin that you're selling, okay, knowing that in the future it's going to go up. So this is where the market greed starts showing itself. The market is going to run up in our estimation, and from what we think, the market's going to go run up right now. And this is going to show the greed of the average investor that the institutions know already. And like I said, they're going to then start going ahead and selling futures, and then they're going to start buying the Bitcoin as you start selling it. You're going to start selling your Bitcoin at losses, and they're going to start buying it from you. And then the market's going to run from there, and then you're going to start kicking yourself. When I say it's run from there, the market's going to start running up from there, and you're going to start kicking yourself. You're going to say, why did I sell it? Why didn't I just hold? Or why was I so piggish about it? And why did I not sell at that high level before the market started running down? So what is the way to work through this? The way we say to work through it is to be super conservative right now. We showed you where that blue line stood right now. Now the market may run up from there, and the blue line is going to go up as well. And we're going to have videos regarding that. Now that blue line is an indication of the change in the trend. So when the market starts piercing that blue line, in other words, it comes from above the blue line and comes down and holds below that blue line, that's going to be an indication of the market reversing. And in other words, that's going to be an indication of the trend changing. So follow along our videos. We're going to be watching this extremely closely because we know the game that these guys play, that these large institutions play. And we are keen to it. We know it. We're going to be watching it. We're waiting for it. We're anticipating it. So hit that subscribe button. Hit the notification bell. Make sure that you stay on top of the videos that we have coming out. And basically, be knowledged. Be learned. Understand what's going on. So, like I said, if you like what we have to say, hit that subscribe button, hit the notification bell, follow along with everything we got going on. Again, we're not financial advisors. This is all for educational purposes. This is not a pitch for you to buy or sell anything at all. So do your own homework and buy or sell based on what your homework shows. With that said, any questions, feel free to comment, email us, and happy trading. We'll be talking to you soon. Thanks much.